a shortened session today. What did you make of it?
James, it was a shortened session, a positive one, but I'm not sure that we can read into those gains too much, obviously, given those very light volumes. And of course, we had light economic data locally and across the region, closing at 53.95. We are still below that key level of 5,400, but nonetheless, we did follow those positive leads that we had coming from the US. We really continue to see that Santa rally over in the US following that unexpectedly strong GDP report. So I think that we were able to follow some of those gains today. Having a look at the best performing sectors, that property sector was up 0.9%, followed by staples up about 0.5%. Energy also up about 0.5%, seeing strength across there following the falls that we saw yesterday. We did see Brent crude oil up overnight, and of course in the materials sector as well. That was quite surprising because we actually did see iron ore falling off overnight, reaching 5.5-year lows, but nonetheless we did actually see strength in that materials sector. Gold was trading relatively flat overnight, and as a result we did actually see Northern Star, one of the worst performers, as well as BC Iron, so probably no surprises there. The worst performers being the telco sector and of course the healthcare sector, but overall a positive one. As I mentioned, those light volumes, probably can't read into it too much, but I do think if we can maintain this positive momentum over the next few trading sessions coming into the end of December, it does look like we might actually close the end of the year for 2014 in positive territory.
Leanne, Atlas Iron in focus in what was, I suppose, a bit of a dearth of corporate news today. Write-downs, but also looking to move to 100% stake of Mount Webber.
James, that's exactly right. We did actually see some strength in the stock earlier in the day. It was up almost 3.6%, but closing flat in the end. So reflecting really the fact this stock is so volatile. Yesterday we saw a similar performance actually following that strong data or strong commentary that came out of the Western Australian government in terms of some of those royalty payments. Of course, aftermarket yesterday seeing those write-downs coming through, which is going to affect their first half earnings. Likely that they will actually drop into negative territory following some of those one-off restructuring costs. But then of course today we did have this news through that they will be acquiring the remaining stake in that Mount Webber mine for about $22 million. So it did actually look like this news today overshadowed those write-downs and of course the fall in that iron ore price that we did see overnight. So certainly investors actually responded quite positively, although closing relatively flat in the end. We know that Atlas Iron obviously has come under significant pressure since the start of the year, down about 88% or so, and I do think that there is expected to be further volatility in the stock coming into 2015, obviously given the weakness in those iron ore prices, which potentially is expected to continue, the fact that it is now loss-making because it is obviously a high-cost producer despite the company actually reducing some of its costs, and of course its Horizon 2 assets, which in our mind still remain a little bit concerning. They still do require a port and rail solution, so I think there are a number of concerns going forward, and I think the outlook still remains pretty concerning, and we can continue expecting to see some volatility in the stock.
Your own view on the outlook for the iron ore price?
James, I do think we can expect to continue seeing that iron ore price potentially under a bit of pressure coming into certainly the first half of 2015, obviously down about 50% or so this year, so it's really affected a lot of those high-cost producers, in particular Atlas Iron. I do think that obviously given the excess supply in the market, the low demand coming out of China, and of course some of the capital losses I think stacking up, and that US dollar surging, I think that iron ore price will continue to come under a bit of pressure, certainly in the beginning of 2015, although I think there is some expectation out there that potentially the sell down that we have seen in that iron ore price has been overdone, and we might actually start to see a bit of a relief rally coming in potentially later in the year. So I do think that the focus will remain on those lower cost producers, so the big miners, BHP, Rio and Fortescue of course, given the fact that they can sustain further falls in that iron ore price, and we obviously still remain very cautious in terms of those high cost producers, Atlas Iron and BC Iron, but certainly expecting that excess supply and that low demand to continue having an impact.
Well, we're talking 2015, Leanne. What else are you expecting to dominate in the next year?
James, if we have a look at 2014, I think one of the difficult parts of the year was in terms of that volatility, which we have discussed before, but we did see that volatility index rising, so that XVI index up about 14% for the year so far. That's versus a fall of about 21% in 2013. Obviously, when we do see that volatility low, that actually means some good returns for investors, but on the flip side, if it is high, it means more difficult returns for investors. So I think if we continue seeing that volatility increasing coming into next year, that is going to mean that earnings are going to remain difficult. So I think we can continue seeing that volatility increasing. I think a way for us really to tackle this coming into 2015, though, is firstly to focus on some of those US dollar earners, and obviously we know that US dollar is continuing to surge, and of course any further talks around rises in those interest rates. But secondly, also as we've mentioned previously, focusing on some of those high yielding stocks, particularly in this low yield environment, and also the possibility of any further cuts in those cash rates. So potentially a way for investors to focus on or to tackle that volatility that is expected coming into next year. I do think that those low commodity prices will continue to have an impact on the materials and the energy sector, so something to keep an eye on. But overall, I think the underlying fundamentals still remain very strong, but expecting that volatility.